Welcome back. I'm here today with Bob de Wilde. He's a product market fit advisor. His background is originally in industrial design, and he has agreed to join us today for some questions for the ones who have not been to my channel before. My name is Roland Umlauft. I'm a startup advisor and CFO, and this is Ultimate CFO. Welcome, Bob.
Thank you very much. Pleasure being here. Thanks
I'm
for inviting me.
excited to talking to you today. Value proposition obviously is a big topic in
Absolutely.
innovation and startup and product market fit. So first, I wanted to talk to you a little bit about really about the fundamentals themselves. How would you describe what is a value proposition?
So, a value proposition is the benefit of your solution, whether that is a product or a service, in the eyes of your customer. And so that is an important distinction because most founders that I meet or startups think about the value proposition in terms of the benefits of their product, the benefits of their service, the way that the technology allows it. But for me, the shift that I always want to do and know about what is the value in the eyes of the customer. And that will be different. That can be different for the same product or same service. Depending on the different customer that they serve, that customer can have a different perception because their problem will be different. And so the value that it brings, the benefit, will be different too.
I hear you. I've worked with a lot of startups, obviously, and what I see a lot of times is that technical founders in particular, they're talking about their features and they're really excited about the technology, but oftentimes they seem to forget about really what that brings to the customer. So what you're saying is think about, pains and gains you're solving, problems that you're solving to the customer first, and then, think about your product features second.
The thing what typically happens is that we usually start off either if it's deep tech, we start with a new technology that we come up with, and then we are looking for what are the applications for that technology, or we come across a problem that we need to solve, and we find an innovative way to solve that problem. But as we progress, we discover new problems or new customer segments that we can help out. And so what typically happens then is that we start putting all of these customer segments that are actually different segments and different use cases with different problems all together in one big lump customer target segment in one very large, broad problem. And we end up saying that we solve everything for everybody. The problem with that is that the customer does not recognize themselves in that. And because we cannot talk clearly, because we don't recognize a problem that our customer is experiencing, we rely on our customer to understand, to be so aware of their own problem that they already know which solution they need. And that's very few customers. And so one of the issues, the work that I do mainly in terms of unique value proposition design and so on, and unique value proposition validation, is first to help the startup understand what are all the different use cases for your product. Make that distinction. Like each use case, each product always helps different kinds of customer segments with different problems. What are they? And once you understand clearly who your customer segments are and what the problem is in their eyes, how they experience the problem, then you can start understanding what the value proposition is for them. And then the key is to understand, depending on who you're speaking with, or depending through which channel, when you know who you're addressing, to focus on that specific part.
So value proposition and product market fit are obviously two different things.
Yes.
So you can have a really interesting value proposition, but you can lack product market fit. How would you describe that connection?
So first, product market fit needs to be a bit deconstructed into what it means. Like we very often talk about product market fit very early on when it's not quite product market fit. There's a product customer fit that begins. So when a startup begins, it's first going to look for its early adopters. It's a niche segment, like a customer segment that has a very urgent problem. And so that'll be very willing to adopt that product or that solution. And so you'll find product market fit for that segment, for that use case. But then as you need to grow, as you need to expand, you'll need to shift you'll need to move on to another use case and need to find a sort of product market fit, a localized product market fit again there. And so for me, the important thing to understand with product market fit, it's not a one-time thing. It's not something that you just tick off right now. We have product market fit and we can scale. No, it's a continuous process. Product market fit is understanding the unique value proposition in the eyes of each customer segment as those customer segments evolve, as you change market segments, but also understanding all the adoption barriers that these customers might have. Because you might have a great proposition, great value, they see it, but there might be something about your product that makes it difficult for them to adopt it. Either because they have their own habits and they don't like to change the way they are currently doing things, or require too much time, too much effort for themselves, for their family, for their organization. If it's a company, danger of damage to reputation. There's a danger that if you are a startup, they might be worried that you might pivot and discontinue the product or service, or that you might go bust, all of these things. So there are many different adoption barriers that you also need to be aware of in order to have product market fit. But the most important thing for me is that to understand product market fit, it's a continuous process. Mm-hmm. It's not a one-time thing.
So when would you say that somebody actually has product market fit? When can I tick that box? How would you define that in one sentence?
Honestly, if you want to say like product market fit, like definite product market fit, that is once you have reached the product market fit with the mainstream market. So not just the early adopters, but also the pragmatists, like the early majority, late majority, which are the conservative profiles. So product market fit. For me, I'm happy to speak about a product market fit as long as they are aware that, okay, this is product market fit for now. And then as we grow, we will need to rethink our product market fit. We will need to adapt it. But for me, the clear sign of product market fit is if you cannot keep up with your demand. If demand is happening organically, meaning that even without pushing marketing or doing big marketing or sales efforts, that there's a sort of organic growth, that people are seeing your product, talking about it, and bringing in new customers, new demand for that.
Mm-hmm. And in your work, I know a lot of founders treat, value proposition design and product market fit more as it's a product issue or it's a marketing issue. What do you really think that founders need to? What should be the mindset, and what should they deploy in terms of resources really to work on this?
The issue that I see many times is that people or founders believe that in order to validate their product market fit, or better said, in order to validate their value proposition, they have to have the product.
Yeah,
that's not necessarily the case. Most of the time, most people will purchase a product or a service actually without using it fully. Either they will do a test or they will look at description. They will make a first purchase or try it out based on the value proposition that you describe or that you show through images or whatever it is. You don't need to build a product for that. We have fantastic AI tools now that exist. All you need to do is basically, you can do a brochure test, just present all the benefits of your solution, explain it correctly, and if you can show in your value proposition that you really understand the problem that you want to solve for that customer, and that resonates with them, they will show their interest. And so that, for me, the advantage of that is that this is something that you can iterate really quickly through marketing exercises, and that gives you a very clear idea about which direction you should go. Mm-hmm. The issue that I see very often is that founders will misunderstand the lean methodology or the agile methodology as just right. The most important thing is that we launch a product as early as possible and then get feedback on that.
Yeah, and then they test different features, and the clients are like, oh, the feature is nice, but it goes to the root. Yeah.
So the issue is that even though as soon as you pick a direction, whether it is just to launch something as quickly as possible, you're already choosing a direction. So you're already heading out in a certain way. And you're discarding all the other directions you could go with. And then there's the other danger is that you might test something and actually miss the mark as to what the value proposition is for the customer. And you might get a false positive or a false negative, simply because your product or what you're trying to do, your value, it's not quite a minimum viable solution yet or a minimum viable product. And you might get negative feedback on that. So for me, what I always advise founders to do is first to test out, do this unique value proposition testing purely through marketing exercises, through language, through images, whatever it is. And then think about what is a minimum viable solution. Meaning, once you've identified the problem that you want to solve for your customer, what is the easiest, fastest, cheapest way, completely unrelated to your product, what would be the cheapest, fastest way for you to help that customer already? So, for example, if your company, if your startup is developing a SaaS, well, then do it the other way around. Service as a software as a service. Like offer the service first. Try to help them right away. Is there some information you can share with them through social media? Can you build a community where people talk about that issue and see what the response is there? Does that problem resonate for that customer segment? Because that is the first step of product market fit, is finding customer problem fit. It's understanding that, okay, we have found this problem really resonates with this customer segment.
So in my pricing advisory work, for example, I usually recommend that they incorporate certain research on willingness to pay early on. In the really before you even build the product, you should be able to know the price point. What's your experience around that?
For me, one of the benefits of when you're doing this, when you're doing the customer research, when you're doing the whole customer problem fit analysis, one of the questions there is, in terms of payment, you straight away look at the current solutions. You try to bring, in any interviews, you try to go as quickly as possible to what are people currently using to solve this problem. If a startup tells me, no, there's no current solution for this, well, then there's no problem. If there is a problem that is worth solving, people are already addressing it one way or another. You want to understand how are they doing that. Then you want to know what do they like about their current solution and what they dislike about it. But then you also want to know, like, how much are they paying for it? And payment can be money, can also be time, effort, reputation, data that they're sharing. There's many different ways of investing something on a recurring basis. And so first you want to understand, like, how much is this costing them, putting in a number on it. The customer themselves might not be aware of how much it is actually costing them, but it does give you an idea about the value that solving that problem has in their eyes, whether they're aware of it or not. And then there's the question of also how much have they invested already? How much have they paid? Because then you have a risk of sunk cost fallacy, or simply that they feel like, right, we already did so much have invested so much in this, now we cannot change that easily, or whatever it is. So being aware of their current solutions, how they are dealing with it, and not just the current product or services, but their workaround, the workarounds, how they are dealing with the parts that they don't like, also gives you an idea about the actual cost of the current solution, and therefore the value of a better one. How do you see it?
I see it very similar. I think at the end of the day, we can never charge more for a product than what the value that we're creating for the customers. So to me, understanding the value creation at the customer, it's absolutely fundamental. I like your take on the sunk cost fallacy. Obviously, that's a really interesting point. I actually am not covering in my pricing course. I might incorporate that. And I think it's sometimes hard for founders to really quantify this value that they're creating in monetary terms, especially, obviously if you're creating intangible value, it's a bit more complicated. But one of the other things, I'm very aligned with you on that, is your biggest competitor normally is the traditional solution to the problem, and it's not some other innovation company out there, because they are probably irrelevant as a competitor. But you need to shift customers from doing things the traditional way to using your solution. So you will always have some sort of a reference point, and if you can make it cheaper, or maybe it's more expensive, but you're creating more value because you're improving the quality, etc. So for me, this is something that should just go really early in the design phase. And what I see with pricing work is a lot of times customers or companies leave this really to the very end. So they do all this, testing features and do you like this and whatnot. They over-engineer the product, so the product becomes super expensive. And then they're about to go to market, and the week before they go to market, they're like, "Oh,
what price do we put on this?
What should we put the price? So let's do $19.99 per month because the number sounds good." And to me, that is just so terrible, because they've invested all this effort, all this money, And then at the end of the day, they have a product that they're either not charging correctly or not enough or, too much, etc. And then nobody wants to buy it.
Exactly.
And to me, the price is such a big part of the product market
Absolutely.
fit. Because if your price point is wrong, you're just not going to scale.
It is inherently linked to the product. And that is when I was saying about what the first things are that I typically do with a startup, and it's understanding all the different use cases, understanding all the different customer segments. And so the work that I will do is first checking, okay, for this specific use case, this customer problem, is there an urgent need for it? And then once we find that, yes, okay, now what is the business case behind it? Because you might have a fantastic use case, a problem that really needs to be solved, but if you cannot make money off it, you might have to move on to another one. And that's exactly where pricing comes in. That's where defensibility comes in, to make sure that, okay, if we take this position on the market, can we defend it? Or will our success attract the attention of other bigger companies that might just copy it without any issue? All of these questions are things that need to be assessed before you actually move on to the development of the product, seeing if there's a proper business case to support the use case.
Let's talk a little bit about, what happens when things go wrong. So let's say we have developed something. We think our value proposition is strong. We think we have product market fit. In reality, we don't. Typically, what I see from a finance side is that has a massive financial cost to the company. So where do you think this will first show up in the numbers? Is it something that, is this a KPI that probably spikes? Would it be CAC or?
I think it depends on what the product or what the service is to, depending on what the KPI is to look at. But usually the sign that I see is when something is plateauing.
Yeah.
Typically you're throwing more money at the sales or the marketing, but it's barely moving the needle. You're still having the customers that you had and everything. If that is declining, then you're in serious trouble. But usually the problem that people experience in terms of product market fit, okay, well, why is this no longer growing now? We've hit a ceiling. And that can be because they've either exhausted the customer segment that they were in. They've exhausted what they could do with that first initial use case with their beachhead and need to move on to another customer segment and redo the work. Probably not even a case of changing much about their product, but simply knowing how to redefine the value proposition of their product in the eyes of another customer segment. If there's a plateau, in meaning that doing more sales effort does not mean converting more, actually does not lead to more actual sales or doing more marketing effort, that's usually a sign of that something is not right.
I think there's also something like phantom growth. Early on, where they're putting a lot of money into acquisition, they're starting to sign up customers, and then because the value proposition is maybe not as strong as they're projecting it to be, you're starting to see those customers churn out relatively quickly.
It might not be an issue with the product itself. It might more be an issue of not being aware of where you are in terms of the adoption profile. Because typically whenever we enter a new customer segment or that we start exploring a new use case, we'll first have the tech enthusiasts, and then we'll have the early adopters, and only then will come like the mainstream market. And the issue that I very often see, that first of all, most founders are tech enthusiasts themselves. Yeah. There are people who have an innovative mindset, who like doing things, who like innovation, new products, and so forth. And so we tend to project that onto other people as well. And then come the early adopters, who have a completely different focus. First of all, there's a big difference between tech enthusiasts and all the rest of the adoption, is that tech enthusiasts are the only people who care about the product. The rest does not care about product, they just care about having their problem solved. Now, the early adopters are really interesting because they are the first who really care about getting their problem solved, but they care so much, they have such an urgent need for having their problem solved that they don't care how good the solution is. Or they won't be as picky, as fussy. So they will be able to say, like, whatever you have is better than the current shit I have to deal with, just give it to me. And so very often what happens is that a company will mistake that for product market fit or actual growth. Because yes, it will be growing among the tech enthusiasts because they love new product. It will be growing among the early adopters because they have a desperate need for something. But then suddenly they've exhausted the early adopters, and now comes the mainstream market. And mainstream market, yes, they have a problem. They would like a better solution for it, but it's not they already have something that works. They already have a solution that is workable. And so there comes the question then, okay, what do we need to do in order to remove these adoption barriers of that mainstream market for our product to be adopted? And that might require a shift might require some adjustments in the actual product or service to make it more frictionless to be adopted by those people. Or it might simply require that in the marketing and the communication that we reassure these customers with any concerns they might have that they don't express, for example. Mm-hmm. So for me, it's much more a matter of understanding why it is no longer growing, and is it linked to simply the customer profiles, or is it in fact linked because there's a changing trend, there's a new competitor in the market, do the general market conditions, have they changed, basically?
Mm-hmm. Talking about those adoption barriers, what would you say the main barriers are? And I have a lot of customers in the pricing work again. Yep. One of the questions I get asked is, okay, when should I offer a free trial? Yep. Is the free trial something that really helps you overcome adoption barriers a lot of times? Or do most of those adoption barriers actually go much deeper and the free trial is not something that really can help you out there?
So I think it depends on whether you're B2B or B2C,
yes,
to begin with. B2C, the free trial is definitely an advantage. For B2B, it might actually shoot you in the foot because they don't care about it being free or not. They have the budget. What they care about is, okay, is this safe? Is this trustworthy? If they share their data with you, what will you do with it?
Yeah.
And even if you have the best intentions, do you have the infrastructure as a startup to actually protect this data and keep it secure against any potential hackers or breaches or whatever? And then there's the fear, of course, that, okay, you're a startup. What happens if you go bust? What happens if you pivot? And in the meantime, I have become dependent on you. My processes depend on you for these things. So in terms of B2B, one of the big adoption barriers that I see among the clients and that I warn startups about is make sure that whatever you offer them, there's always an easy way back for them. That de-risks for them. They won't care so much about the money or whatever it is. I think rather than a free trial, just offer them like one license, so they can try it out with one license, the full system, and if they like that, then they can expand to several licenses within their company, for example. Tier-based models work quite well as well in general, so that people can kind of adjust to their needs and then expand as they go along.
What about reputational risk for the buyer in a B2B setting?
I think that definitely plays a part. I think that is definitely one of the big advantages that the big corporate providers have, even if their solution is not as good, simply because if the solution turns out to be bad, whoever recommended them said, well, how could I know?
Yeah,
it was this big name, like they're supposed to be the standard, you know? Whereas if you're introducing a startup within your company, let's try this solution, you're really putting your reputation on the line.
Yes.
It's your judgment, you're the ambassador, you're the champion for them, and people are going to come to you if they messed up. You might get the nickname of that startup if it becomes a problem because you messed up. Yeah. And so I think a lot of people will be hesitant to take that chance.
Is there any way around that?
So I think that the way around that is that you need, once you find a champion or potential champion, somebody within the organization who will be willing to actually promote it and convince the other departments or convince the decision makers to adopt your product, you need to give them the cards and the arguments to convince the people they will need to speak to. Like tell them what is it that you need to tell your CEO, or what is it you need to tell your manager, what is it that you need to tell the IT department. IT will have these and these and these concerns. Oh, yes. Like anticipating all the potential adoption barriers within the different departments of the company. And once you de-risk that and you can show like what the benefits would be of it, then basically it becomes a no-brainer to try it out.
Yeah, and the logo farming, I guess, also helps.
Exactly. So one of the like the guerrilla approaches, like allowing users to use it independently from the rest of the organization. So something that somebody can use on their own, but that has a perfect interface with the existing systems within the company and does not represent a risk in terms of data or whatever it is also a good approach. I want to hear very quickly, how do you feel about the free trial?
I don't like free trials
No.
in a B2B setup. I think free trials in a B2B setup have a lot of risk to later convert to monetizing, because you give the free trial and then the clients, they come back, they're like, yes, but it's still maybe in a beta version, it's not fully, there's some functionality missing. So until you add that, we won't pay, and so forth and so on. And I've seen companies literally use, free trials for 2 years, and then when it was time to monetize, abandon the solution. So free trial has a risk. I agree with you. It doesn't solve necessarily the issue. There are other ways around it. Let's say subscriptions are a problem, right? You can do an outcome-based pricing early on when you're really, really early stage, and companies are not convinced about the actual value that you're bringing, so they don't also want to have this shelfware risk from paying a big subscription money and nobody uses it. You can, until with your first couple of clients, until you have these big logos on your website that really validate you to the rest of the market, you can do something that's a little bit more, let's say, outcome-based, transaction-based, especially if it's just low usage at the beginning.
Right, so they only pay on what they actually convert, the benefits that they get from your product.
Which can be tricky to design as a pricing plan, but and obviously it doesn't work very well at scale with enterprise buyers because they need budget predictability. But if you're at this, $100 a month type of price point, nobody cares. So that to me would be a way around, let's say, a free trial. Or you could, sign an annual contract with them, but give them the option to opt out after 3 months, so they don't feel locked into something that's not working for them. So again, there are a lot of solutions to address this that are not necessarily a free trial. I really don't recommend free trials with B2B.
And how do you feel about, because that's also something you see very often, whenever you attend a webinar, a presentation that is given, like a free education that is shared by a company, there's always the sales pitch somewhere in there, and then there's the price point. This is usually €5,000, but if you sign up today, it's only like €1,000. I hate that personally, because that's it. Well, then it's not worth €5,000, is it?
Exactly. So the discounts, I think, if you're giving me a discount, you need to justify why you are giving me a discount. Don't give me a discount for free. And there are some industries where this is standard. So when you buy a mattress, unless you go to, I don't know, IKEA or something like that, but if you go to a mattress store, all the mattresses have a 70% discount. It's just the norm. So every mattress costs, €2,000, and then they knock 70% off, and you end up paying whatever. They're moving this discount number around while the products are pretty much all the same, and it's really hard also to kind of make up your mind, because the 5 minutes you spend on it in the store, it's just not really. So some industries, they're literally just running on discounts, but in general, I think to use discounts as, just flat applied, I think it makes you lose credibility. Obviously, some companies use discounts to drive velocity in the sales. So they, give you an offer for, I don't know, €5,000. And then they come back and they're like, okay, look, it's the end of the quarter. If you sign up this week, we give you 20% off. And that's fair enough, right? As a buyer, when a company does that to me, I'm usually just not having it. So I tell them to not pressure me into the sale, but then I demand the discount even if I don't sign with it. So it often can backfire as well. And usually if you demand it, it doesn't matter if you sign within a week or 6 months, you're still going to get the 20%.
It's good to know. It's a good tip, actually. You can always ask for the discount.
They've shown their willingness to give you this for a cheaper price. So give it to me for a cheaper price. You want me to buy, let's go.
That's a good point, actually. Remember that time you gave that discount?
Exactly.
Now
I'm willing to buy. Am I going to get the discount?
Yeah.
If I don't get it, I'm going to go with a competitor. So discounts can be tricky. I think discounts, they need to be really well thought out. One thing that I do recommend companies with respect to their price point and their discount is early on, when they maybe have an MVP they're taking to market, I think it's good to already show what the final value will be of this product, and explain, look, this is an early version. Right. So for the first year of your subscription, we're giving you 60% off. Yeah. And everybody understands that because you're not actually delivering the full value yet. But you're already indicating your value and your full value proposition or your ambition going forward. And you're also positioning yourself as, a premium player or a value player. Yeah. So I think it helps.
In that case, absolutely, because you show like, right, this is a loss for us, but we justify it that way. But so it's a very different thing that when you get the message that, right, you're taking 60% off, but you're clearly still making a profit. So what are those extra 60%?
Yeah.
So in normal situations when it's not like that, but when you're already sort of up and running, what would you say would be the maximum discount percentage-wise that one could give on a product or service without losing credibility?
I think a 5-10%, whatever, especially like, look, you can do these kind of, year-end sales, whatever, and limited time.
When it's really clear, because
if it's very, very clear and it's just, okay, boom, you can give a couple of percentage points off. Obviously, the typical annual payment versus monthly payment discount, which I think is more relevant in B2C, obviously. I don't actually think you need to give such a massive discount for annual payments to a B2B client, because oftentimes B2B clients, they actually prefer to pay you annually. For them, it's more work to, pay every month, process an invoice, etc. They have the money, unless you're going for this kind of SMB, small, medium businesses that have maybe a little bit more cash constraints. If you're selling to a large company or enterprise buyer, they will have a PO process. So they will want an annual invoice anyways. So for me, that's not such a big point. But if you're more going for the low end, let's say between monthly payments and annual payments, give them, between 10 and 20% to entice. So it's this story of you get 2 months for free. I like much more 2 months for free than you get 15%
right,
off.
Right. You get 2 months for free if you take the whole year.
Exactly.
If you pay 10 months.
Exactly. Yes.
I get it. And so actually, since we're talking about pricing, one thing, because I get that question a lot also about how to get an idea about which pricing you should set.
Yes.
I once heard this rule that you ask your customers, what would be 4 different price points? What would be like a ridiculously low price point for you that you think like this is not believable? What would be like a low price point, a high price point, and
a price point
that's insane. That's just way too expensive. Yes. What do you think about that method? Is that representative?
I love that method. This is called the von Westendorp price sensitivity meter, and I've been using this in client projects a lot. It's a very, very nice technique that, first of all, it gives you a good price range to kind of aim for. It's not going to give you one price. It's going to give you a range, but it also gives you an idea about pricing, price elasticity. So how sensitive is your demand to price changes? You can measure that out of the responses. For this to work, there are a couple of things you need to get right. First of all, when you do this, when you ask these questions, it has to be clearly a research setting. You cannot make this a sales call in disguise and ask how much the customer wants to pay, because you'll not get a right. Number out of that. So sometimes, companies are struggling getting this set up right, but I think this is something, if you do it very early in your value proposition design, I think it's fantastic if you can incorporate that in there. And then the other nice thing about the 4 questions is that as humans, we're really bad at evaluating a price in isolation, right? We have this anchoring issue where we always compare prices, etc. And the good thing about the 4 questions is that everybody will aim for a different area, but between the 4 questions, they will give you some sort of consistency in their answers. And then once you aggregate enough responses together, you will get a reasonable kind of average. And you actually don't need a lot of responses there. So I've done a von Westendorp study with a large multinational client for an AgTech solution in Mexico. And we had no idea what to charge for this solution. So this was like, should this be free? Should we charge $1,000 a month? Anything. And so we did this, and we interviewed 20 potential farmers. So it's not a very large sample size, and we got fantastic results out there. So we got a range of like $250 to $500, which gave us a lot of guidance on where to put ourselves in terms of, and it validated that we can actually charge for this.
But of course, it also depends on the market segment. Like it's different if you approach people in South America versus North America, or
But and you need to segment. That's the other thing. Segmentation, yes. You need to have your segmentation information in those responses, because otherwise you're just not able to.
And is there a specific order in which you ask for the form? Speaking of anchoring, because if you ask for, do you start with like what lowest and go from low to high, or do you go like extremes first and then the ones in the middle?
I ask for the fair price first.
The which one?
The fair price. So what do you think is a fair price?
Okay.
Second one, what is a price that is high but you would still purchase?
Yeah.
Third one, what is a price that is so high you would not purchase?
Yeah, okay.
And what is a price that's so low that you think the offer is ridiculous?
Right. Okay.
That's the order I normally use.
Right. So you go like second, third, fourth, and then go back. And then the first. Okay.
Yeah. Right. And because you're kind of anchoring them in on what you think is the good price, and then the rest just helps you calibrate.
Right.
But I love that technique. I think it's a really, really cool technique. I wanted to talk to you also about segmentation.
Yep.
So when I do pricing work, segmentation, I think, is causing 99% of the problems in pricing. It's not about, is it a subscription, or is it variable, or is it fixed, or is it one-time purchase, or is it $9.99 or $10? It's the segmentation that's wrong, where the price just doesn't fit that particular buyer. And we talked about this a little bit already. I've been trying to push my clients to really spend a lot of time on their segmentation work. How do you approach segmentation? I think it's just so hard, because especially in B2B, they end up coming with this, a small company, medium company, large company. Yep. And I think segmentation shouldn't end there. It's obviously a parameter, but how do you approach segmentation work, and how do you make it meaningful?
So for me, as I mentioned, like that's the first exercise that I do with them. And I speak about use cases. So the first exercise that I do is, first of all, to for the product, or it can be that if a product has two different solutions that are joined together, we treat the solution separately. But so for each solution that the company offers, look at all the different use cases. And that's just a brainstorm exercise. They do founders on their own with the rest of their team. But basically, the way that I define a use case, it's a customer problem. What customer segment, which problem? And so for these, we look at all the stakeholders, all the different people who are involved in that, the customer, the user, if they are different people, and everybody else who's involved in that ecosystem has an influence on it or is affected by it, and so who might have something to say or influence the decision of the purchase. And then from there, we will look at, like for each use case, each customer, like, okay, what is that customer's problem? And do the whole analysis of that use case, what the existing solution is, how much they are paying for that existing solution, and so forth. And so in those exercises, first, this is an exercise that you do on your own, based on your own assumptions, imagining how your customer segment would answer in their own words. But you make those first assumptions. And then afterwards, you move on to actually having these conversations. You do the interviews, you go speak with people. And what happens there is that if you notice that in your questions that you're getting different answers, especially on a couple of key topics, which are why this use case or why solving this problem is important to them, or what they dislike about the current solutions, or if they have already proactively started looking for a better solution, if you see that people are giving different answers there, that might point out to the fact that you actually have two separate segments that you've put together. Then you need to look, okay, like what is the distinction? Like some people are giving this answer to this question, other people are giving another answer. What is the difference between them? Mm-hmm. And then you split them up into two separate use cases because there are two separate customer segments. The other way around as well, you might be dealing with two different customer segments, but turns out they give the exact same answers. All right, let's put them together then.
Yeah.
And so for me, this is unfortunately something that you cannot do with AI yet, because it won't be able to tell the difference. This is something that you only really notice when you speak with the actual people, is to notice the consistency in their answers within a specific customer segment. And so for me, that is the best indicator for knowing how to segment your customers.
Mm-hmm. One other thing that I'm seeing with clients is that there's a tendency to try and capture as much of the market early on as possible, and obviously, they're chasing revenue, etc. So it's very normal that this happens, but I think it's much better to really focus on one segment and to kind of limit your scope. How do you get customers to abandon certain segments and say, hey, look, we're only going to do this or that?
So for me, I'm all for exploring segments, but you don't need to build a product for that.
Yes.
So your marketing team or whoever is in charge for business development or finding the opportunities should constantly be checking at different potential customer segments, different potential use cases, and trying out, testing the unique value proposition on them. So for me, I'm all for customer segment exploration, not customer segment chasing, like you say. If a company if the CEO says, right, we should explore this, start building, explore this, start building, you're just going to drain your resources, stress out your team, not provide them a clear focus. Developers don't work like that. It doesn't work. But the beauty of it is that you don't need to build to validate a unique value proposition. That's what I said. And most of the time, most of the customers, because they are buying your product or service, not for the product or service, but because they want to have their problem solved, if you can convince them that you have a thorough understanding of their problem and of what they need, they will buy it. And once you have that validation, okay, now we put great, fantastic. You delay the process a little bit, do the research, do the interviews and everything with them to clearly understand what they have. And in the meantime, your team can start building. And you can even do it together with the customer if they want it, give the feedback so that they can be involved in it. So it's that distinction between, yes, of course, you don't want to change too many customers. At the same time, you don't want to build products because then you're not focused as a company.
Yes.
But you need to explore the different customer segments beforehand, before you start building.
Oh, yeah, absolutely.
Rather than going all in on one direction and then realizing that, okay, we're wrong, we need to start again. So the sooner you can, which way you should be headed or which way you should validate, the better.
So what I'm referring to is a bit more the scope creep that happens later on. So for example, a company offers a SaaS solution to hotels, and then the CEO is at a conference and meets some person that owns a chain of gas stations. And this person is like, this would work really well for me. So it's fine to, sell to the off client something that's really not in your focus area. But then what happens typically is like, there's gas stations. So now let's also explore gas stations. And then they build a little product feature specifically for gas stations. And now this whole solution has become really diluted in a way, because it goes from, we are a customer solution for hotels to, we are a platform that offers client, optimization processes.
Exactly.
Where nobody understands what you're really doing. And I see that happening a lot. And some companies, they just have a ton of different business units really early on. So just as an anecdote, I used to be a CFO of a drone company. And this drone company, they had 5 different business units really early on from the get-go. They were doing, very different industries. And I was trying to raise money. So I'm at an investor conference pitching for this company. And I get on stage, I present myself, I present the company. And the first line I say is, we address these 5 different industries. And somebody from the crowd yells out, why? And I was literally done at that point, because, you cannot go back from there. You're like, okay, well, there's value in all of them, blah, blah, blah. But yes, absolutely. It's really hard to scale 5 things. And now, today, this company is still around. Nowadays, they have one business unit. So yes, were they exploring? Not so much, because they had full-on built, solutions, a lot of investment, etc. What's too early to add scope? And or when am I too late maybe to add a segment?
It's hard to give like a standard answer to that. It's there are many different companies that were struggling with product market fit, not finding their traction until they realized that there actually was a completely different market segment. Like if you look at Twitch, for example, Twitch did not start as a gaming streaming platform.
Yeah.
What happened, they were focused on something completely different, and then noticed in the background that the gamers had been hijacking their own product to adapt to their own need. And so that whenever you see that people are already using your product and modifying it, like doing modifications on what you're doing, that is a very good sign that there's something, a new market that is there. And then of course you want to explore it. Now, usually it would be better to have it then as a separate independent product underneath a same umbrella rather than try to force mix everything together. Just keep it as have your parent company be more like a parent company, like an umbrella company, or have a suite of products, which we see quite often now also with, like, I think more and more with software is more offered like a suite rather than a one all-in-one package. Like you're saying, for most startups, especially for me, it's what I call the coffee bar cafe problem. And that is, if in the morning you are in a new neighborhood and you want to get a coffee, and across the street you see like a general cafe or bistro that sells coffee, but along with a whole bunch of other things, or just a coffee bar that only sells coffee, which one do you go to?
Yeah.
Go to the coffee bar, because 100% of what they offer corresponds with what you're looking for. And so the thing is that most startups start as coffee bars. They find a new way to make amazing coffee. They have the best coffee in town, so they set up a coffee bar. Then they realize, you're right, but we're renting this spot now for the entire day, but we're only selling in the morning. So, and sometimes people want to have like something to eat as well as sandwich. Maybe we should start making sandwiches as well. Like, but we're making sandwiches. Like, why don't we like offer lunch at lunchtime? And okay, well, that's good then. But people don't want to just drink coffee. Then they might like a beer. Well, let's get a license. Then we can also stay open till the evening.
Yeah.
And so before you know it, they've become a cafe.
Yes.
They still have the best coffee in town. But then another coffee bar opens down the street, and all their coffee customers go to that little coffee bar with their shitty coffee. And so that's something that typically happens with startups, is that wanting to expand the scope of their market and increase their revenue, they end up losing their value proposition towards their clients. Yeah. And so if you look at cafes and how do they solve it? Well, in the morning they will put a sign on the street saying like a new roasted Arabica coffee, or we have the best coffee, specialized barista, something in the morning to bring the people to the cafe. Afternoon, puts a lunch menu on the street. Late afternoon, happy hour from 5 till 7. In the evening, live music tonight. So depending on knowing what the customer is looking for, what time of the day, or depending on what the customer segment at that moment wants, they will talk about specifically that. And so for me, that is the important thing to understand for a startup. There's nothing wrong with being a cafe, but just be aware that somebody who comes in the evening looking for live music, don't tell them about your coffee, or don't tell them about your lunch menu. Just tell them about the music that we play tonight and so on.
Talking about something completely different. Yeah. So, as you know, I'm mostly in B2B. Yep. And when it comes to, things like value proposition research, segmentation work, pricing research, etc., sometimes companies are struggling a little bit to work with clients when they have a very limited set of customers. So let's say their market has, size, but it's maybe 15 large customers they can sell this to in Europe. Yep. And is there a way to engage in a meaningful way with these customers and do all this value prop work ahead of time, or what's your experience working in this kind of setup?
I need to give the very boring answer of it depends. Again, depends on how open these customers are to collaborating with you, or almost having like a partner relationship with you,
like innovation project.
Exactly. If they have like a more venture clienting approach to actually collaborating very closely with you to help you develop your product to their own needs. If they are in an industry that likes to keep its cards very close to the chest, it's a different story. So the interesting one to me is the one where they like to keep their cards close to the chest, because how do you actually test your unique value proposition? And so the only advice I can give there is that sometimes the only touch point you will have with them is when you get a meeting with them. Like the typical thing when you get a meeting, the startups tend to jump into the conclusion that, right, this is our one chance to sell to these people, so we really have to push the sell. When in fact, sometimes it might be more useful to build relationship, build trust. If you can see that will be their main barrier of adoption, that they're really just accepting the meeting because they want to know who you are, if they can trust you, forget about the sale, build a relationship. But then in the presentation, based on the assumptions that you have as to what their pain points might be or their adoption barriers, what the unique value proposition is that they will care about, you put a couple of calibrated sentences or slides in that deck, knowing exactly now we're going to talk about this issue. And you make sure to always be more than two people in the room presenting. One person takes care of the presentation, the other one or the other two people observe the room to see like what happens when we talk about this. Do they lean in? Do they take notes? Do they shift on their chair? Pay attention to how they're reacting. And everybody in the room, not just the CEO or whoever it is, but there might be someone that you know that is looking at this, who might not have something necessary to say, but then afterwards, during the Q&A, try to direct the conversation, the questions, the discussions towards that, and hear them out about how they feel about it. So basically, it's understanding like a meeting might be more beneficial sometimes as a relation builder and just like a feedback, an opportunity of getting feedback from the customer on your product and their needs than trying to push a sale. Because if you're just going for the sale, it's just going to be, we'll think about it, we'll get back to you later. You get zero information. And then good luck trying to get information from them afterwards. Oh, could you tell us why? You'll get diluted.
Exactly.
ChatGPT answer, whatever it is, you won't get. These moments, these touch points with the clients are extremely valuable. So it's my recommendation is to treat those things also as customer research opportunities.
The same with pricing. So companies get really nervous about going into those meetings because they're like, we need to have the pricing ready, and we cannot get it wrong because there's only X customers. And my recommendation on the pricing is also that, look, focus on the value proposition. For the pricing, aim high because they're always going to negotiate it down anyways. And if you get it so wrong that they will never be able to, pay this, if they like your value proposition, they will tell you. They're not going to, drop the conversation because your price was maybe twice as much as what they were expecting.
Absolutely.
They will say, hey, we really like the product. We would love to do it, but you're just really way out of our range. So then you go back, okay, what's your budget? And you kind of find this middle ground. So I think, again, no fear, go in with an open mind and just explore what you can get out of that.
But let's say, for example, that you put a price point that is double what their budget is. At that point, you cannot say, oh, right, well, we'll do it for that price. No, then it's the argument, well, we'll see if we take this and this and this out. If we can bring it down to your thing. Of course. Never, it's always about, and I think that's the advantage of having the tier system, the custom system. It's like, right, this is a high price point, which has everything included. Now, maybe we can take some things out because we see that you don't actually need it.
Okay, a couple of quick fire questions. So what's the bigger killer, chasing too many customer types or scaling too early?
Again, chasing customer types, not good. Exploring customer types is a very good thing. Scaling too early is very dangerous. So I would say that the bigger one is scaling before you're ready, before you can assure the demand is just going to really shorten your runway. Okay.
Best signal of product market fit in one word?
Not being able to keep up with demand.
Okay. Most overrated startup metric?
I would say how much investment they have received.
Okay. I would say headcount.
Or headcount. That's also a good one.
There's so many startups that measure success in headcount, and I think
how many employees or how many people they have. Okay,
it's terrible.
For me, I'm I was thinking more about the smaller startups. It's I like the investment one because that one is often confused with traction.
Oh yes, as well.
Or that they say like whenever you see the traction slide, very often they put like letters of intent. But letters of intent is something else still, but it's better. But investment, like it's not because an investor is willing to put their money into your company that a customer will.
Yeah.
And so investors are not always that difficult to convince into putting money into your company. So from me, that's not a...
I mean, it is an external validation point, obviously.
It is, sure, and it will convince other investors.
Yes.
The fact that there's a lead investor, like whenever you never want to be the first investor into a company, you want to make sure that somebody else is doing the same thing, but customers will see it very differently.
Finish the sentence. The founders who make it are the ones who...
understand their different customer segments and understand the different needs of their different customer segments, and also the ones who don't fall in love with their product.
About you a little bit. How did you end up doing this?
So my background is I was working with industrial design before, and when I had studied product design here in Barcelona, the part I enjoyed the most was the customer-centered design thinking. So doing the interviews and starting off with one specific idea, but then when you start speaking with your actual market and with the users, you discover that their real pain point is actually somewhere else. And so having this whole analytical approach to understanding the emotions, the feelings, and the need of people, I thought that was super, super interesting. But then when I started working in a design agency, customers typically, which were startups usually, would come with a very clear idea about what they wanted us to design, develop, and then build as a prototype. And sometimes I had my doubt, like, have you done your market research? Are you sure about this? Because this is a big investment and I'm not really seeing it. I don't know your market, but have you validated it? And it was always, yeah, sure, we've done the user testing and everything, and this is good. And then usually I would end up spending months, sometimes years, developing something. Then when it hit the market, like no demand, or very little demand, unfortunately. And so that's when I started going to founder events, because I want to speak to founders to understand, okay, what's happening here? Why are you not doing your homework? You're just investing tons of money, time, that of your family, friends, of investors, into something you haven't properly validated. And so that's where I understood the problem with solution bias, which to me is like, that's like the core, like the root of all the problems, is that innovative people, we're incapable of thinking about a problem without having a solution in mind within 10, 20 seconds. And the problem is that as soon as we have a solution in mind, the focus shifts from the problem to the solution. And so everything we're going to learn about the problem afterwards is going to be interpreted through the lens of that solution. And so that's on its own. And then there can be the actual attachment to the solution, like falling in love with your idea, which is even worse. Because then it suddenly becomes your baby, and nobody wants to hear that their baby's ugly, so we stop asking for feedback or anything, we just become completely blind to it. And so there is this mantra within the startup world of like, don't fall in love with the problem, not the solution. Yeah. But the reality of it is that you cannot avoid it. Like, just be aware of it. And for me, that's a big exercise whenever I speak to founders, like, be aware of your solution bias, so that when you do interviews with people, you follow the rules of the MUM test. The MUM test is a fantastic little book to read about how to do customer interviews. And the two main rules are, first of all, you don't mention your product. You only talk about the problem of the customer. That way you just learn a lot more. There's no danger of them telling you that they don't like your idea or your solution, or that your baby's ugly. It's completely safe. They won't give you answers that they think you want to hear. They will speak very, very sincerely. And the second rule is, you don't ask them to imagine anything. Like, you don't interview their imagination, you interview their memory, their experience. So you try to extrapolate whatever it is that you're asking about to a real situation. For example, you don't ask somebody how many times per week they eat vegetables, because then they will think, well, I'm a healthy person. A healthy person eats vegetables every day, so 7 times a week. No, you ask, when was the last time you ate a vegetable? Which vegetable was it? And you ask about those things. So you because people don't know themselves. So those are the two main things. So that's how I got involved in it, just understanding these things. And so I was going to these meetings, first giving advice for hardware startups, but then understanding that actually it's not just hardware. The main issue that I see and that I'm helping people with is about understanding that customer problem fit, understanding the perspective of their customers, and that comes before the solution. It's purely a matter of understanding the. So it's not linked to the solution. So that's when I started advising now companies that do tech services. It doesn't matter.
Mm-hmm. What's the thing that changed your thinking the most over the last years?
I think what changed the most was understanding the importance of distinguishing the use cases, distinguishing the customer segments, understanding this that almost every startup solves, it can be with the same product, but can solve different needs for different customers. And if you don't have that distinction, you cannot have like a clear value proposition if you don't understand that separation of use cases.
Mm-hmm. And where can people find you, or who are you collaborating
They
with?
can find me on LinkedIn, Bob de Wilde, or they can find my website, adelantum.eu.
Okay. And you're also part with the S2X Speed as a mentor?
Yep, that's right.
Any other programs you're in?
I'm also involved in the G Accelerator program of GBSB and the Impulse Agritech program. That's also in Spain. And then in Belgium, I'm involved with different accelerator programs there. I'm also involved as a mentor with Founder Institute. So I very much like working with the accelerators because they are the best chance of actually talking with the early stage startups, which usually don't have a lot of funds to actually get like a proper following in terms of this customer alignment, product market fit. So whenever you work through an accelerator, it's a much bigger chance of actually doing the trainings, doing the mentoring, and really help them stage by stage until they really understand how they should go about it with product market fit.
Yeah, it's a hard thing when your work is most relevant in the really early stages. I think it's
so it's relevant at all stages. That's an important thing to understand. Like it's like product market fit is a continuous exercise because you need to all the time, every time you're moving on to a new customer segment or a new market segment, you need to reassess your product market fit. But it will be different if it's like early stage. There's the opportunity validation. Then during the development, there's anticipating all the barriers of adoption so that you know which features to prioritize, which other elements you need to put into your product to make your product safe or easy to adopt for your clients. And then there's the whole one at the moment of the launch, understanding the marketing language that you're going to use, which UVP to put forward, and so on. And then there's the whole stage also of how to deal with customer feedback. Once you start having customers and you get the feedback, which feedback should you focus on, which should you not focus on? That was actually something I wanted to say before as well. In terms of the like making the distinction when people start telling you what they want from your product or changes that they like, or you were saying like you speak with somebody at a fair, like, oh, like gas stations, that would be interesting, we should go with that. How to know if this is something to follow up on? Usually a good question is like, oh, and have you searched for a solution like that? What did you find? If people have themselves already at least Googled it or done some research to see if that kind of solution existed, that shows that there's a genuine interest that's worth following up on. Otherwise, a lot of people just complain or share ideas because they like to do it, but don't actually. If they say, no, I haven't even Googled it, I never looked into it, it's probably just noise.
Well, thanks, Bob, for being
My
here
pleasure.
and spending some time with talking to me, and good luck with your advisory.
Thank you very much. And likewise, very much enjoyed the podcast here. It was most professional setting I've ever been in for a podcast, I think. So, and really enjoyed the conversation. So I think we could keep talking for hours on this topic.
We'll do another.
All right,
we'll do another
happy
one
to be
in
back
6 months.
anytime.
Yes.
Exactly.
Great. Thank you.
Thank you.